I believe we could see a track to anywhere between 2570 and 2590, possibly hitting 2600. But that's where I would look for this particular leg of a rally to conclude, kind of touching 2600, testing the water, so to speak. The thing about it is when we look at silver in a little bit, we're in a defined range. We've been there in terms of the highs as well as the lows. I'm looking at a support at just about 29.25. The next level of resistance is about $30 per ounce.
Gold prices have skyrocketed to a record-breaking $2,500 an ounce as of Friday, a dramatic rise from last October's $1,800. This surge is part of a larger trend in 2024 that has seen gold repeatedly hitting new highs, driven by a mix of global economic factors. Analysts at GSC Commodity Intelligence are calling 2024 the year of the metals, as gold's remarkable performance has made it a must-watch asset. Gary Wagner, editor of thegoldforecast.com, points out that over the past few months, gold has reached several intraday highs, starting in April and continuing through May, July, and now August. These consistent gains reflect gold's resilience despite market pressures, especially after breaking past a key resistance level. The breakout was marked by a surge in buying power, as seen by a significant green candle on the charts. Despite minor fluctuations, gold has held firm just above $2,520, a crucial level that had once been strong resistance but now acts as support, signaling that bullish momentum is still going strong. While gold is breaking records, silver has been playing catch-up. It hasn't revisited its all-time high of $50 since 2011, and after that peak, it experienced a long correction that lasted until 2015. In recent years, though, silver has shown signs of recovery, especially in 2020 and 2021, when it briefly climbed from $30 to $32 per ounce. Gary highlights that these levels represent key resistance points that silver is starting to challenge again. Silver has been gaining strength lately, particularly over the last 2 weeks, with support solid around $29.25 and resistance nearing $30, positioning it for a possible breakout. We'll be sharing clips from Gary Wagner's insightful interview with Kitco News. But before we dive in, don't forget to hit that subscribe button and turn on the notification bell so you never miss an update. Thanks for watching and enjoy the video.
What I'm pointing out really is the fact that we've had a series of intraday highs coming in, going back to April, then again in May, another one in July. The most recent one came in just last week, middle of August, and of course, one in the beginning of August. So when it broke above this particular, what we labeled as really strong resistance, you can see the size of that candle. Now, today we've had gold backtrack just a little bit. That's a small red real body. But if you notice the low came just above about 25.20, and 25.20, of course, is that level that we earmarked as a technical level of resistance. And that's important. In terms of what I believe we could see, I still believe that we are in a motive wave, a impulse wave number 3. And I believe we could see a track to anywhere between 2570 and 2590. Possibly hitting 2600, but that's where I would look for this particular leg of a rally to conclude, maybe kind of touching 2600, testing the water, so to speak. But the thing about it is when we look at silver in a little bit, we're in a defined range. We've been there in terms of the highs as well as the lows. Mm-hmm. And with gold, it's not like that because we're trading in uncharted territory. So there are less tools that we have to use to forecast where we think the upside of gold is rather than silver. It's a lot more clear cut with silver. But all I've done is a basic Fibonacci extension. I've looked at this rally and I've taken the move from what I'm labeling as wave one over to wave three. A 1-to-1 takes us 2584. And then these are possibilities of where it could go if it moves higher. If we take it to where we are now, if we look at what happened back in 2020 and 2021, we had silver flirting with highs from $30 to $32. That also corresponds to a former level of support before it broke hard. And so now when I kind of move this chart up a little bit, and let's focus it. Once we hit 2275, we had the first of a higher high that came in since its deep correction. It really traded and flirted with just above $32, came down, and look at what it's done over the last 2 weeks. It has been performing very strongly. Right now, I'm looking at a support at just about 29.25. The next level of resistance is about $30 per ounce.
Recent trends in the gold market indicate a bullish outlook as prices break through significant technical resistance levels. This movement is primarily driven by anticipation surrounding the Federal Reserve's upcoming actions. The FOMC meeting minutes and Fed Chair Jerome Powell's comments later in the week are expected to offer critical insights into the future trajectory of the Fed's monetary policy. With mixed signals from Fed officials, some advocating for a cautious approach to rate cuts, while others suggest a potential easing cycle could be on the horizon, traders remain cautious, avoiding strong positions. This uncertainty about the timing and magnitude of future rate adjustments keeps gold prices near historical highs as investors assess inflation and economic growth implications. The market anticipates that the Fed will implement its first rate cut in years at the September meeting. While recent speculation hinted at a possible 0.50% cut following a volatile jobs report, the prevailing expectation now favors a more modest 0.25% reduction. Gary asserts that this adjustment is perceived as a key factor behind the recent increase in gold and silver prices and a boost to equities. The weakening dollar also supports the positive outlook for gold, reinforcing the fundamental drivers behind its price gains.
Right now, the market is reacting with optimism to the potential for rate cuts further on down the road. Yeah. Expectations have widely grown right now that September will be what we'll call a pivot date, the point in time in which the Federal Reserve shifts from a very aggressive and restrictive monetary policy to an accommodative monetary policy. And they're going to do that by a series of rate cuts. The anticipation right now is a 0.25%. A couple of weeks ago, it was 0.5% after the wild jobs report, but that's kind of moved out of the market in terms of optimism or consensus. But the expectations of the first rate cut in many years by the Federal Reserve at the September meeting is high, and that's what's driving the precious metals higher along with equities. Belief is what is important are how many rate cuts the Fed implements this year. It's widely expected that they're going to do a rate cut in September. Mm-hmm. The odds are that that will be a 0.25% cut. Now, the Fed meets 3 times until the end of the year, September, November, December. And the question is, will they follow that with another interest rate cut in December or November? Will they have 2 this year or 3 as they had planned a while ago? I personally believe that 2 cuts are likely. I think that we'll have more than 1, and I'm not convinced they'll be as aggressive as to cut it 3 times. My sense is that market participants have largely factored in at least 1 rate cut. Right. If we get the second one, that's going to move gold higher faster. Resistance would come if they, for example, didn't cut rates in September, which I believe is highly unlikely. Mm-hmm. That is pretty much baked into pricing. But after 0.25% cut, they haven't baked in the potential for 2 or 3. And that's what will change the momentum of gold and silver.
Silver's recent bullish reversal on the weekly chart suggests the early stages of a sustained uptrend, potentially pushing prices above the May high of $32.52. Despite significant resistance near $2,480 in the gold market and the key psychological level of $2,500, the overall outlook remains positive. The anticipated rate cut by the Fed and ongoing economic uncertainties are likely to drive further gains in both metals, reinforcing a favorable short-term forecast for precious metals. Share your thoughts on Gary's prediction in the comment section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Until next time.